their spend, and Microsoft didn't. And I think part of that is also that investors were waiting to see what Microsoft did in terms of actually applying and wrapping the AI into their various products quickly enough so that it can be consumed. And so the big story here is what will happen with all of this spending, right? And I think that in earnings seasons and quarters to come, what we want to see is the actual ROI on this AI spend. But what we are seeing is that the AI infrastructure continues to grow. So what started as just a chips play has now fed down into the Mag 7 companies and is now broadening out. If you look at, we were talking about the tech earnings today. If you look at IBM, for example, right, they had a very favorable beat. If you look at GE Vernova, for example, they increased expectations for future revenues, and kind of why is that, right? And I think because on the IBM side, again, it's a tech story. They're investing in quantum on GE Vernova, it's this AI infrastructure.
You called it the Ivy League
trade AI automation, quantum machine learning is continuing to grasp the attention of markets, and we just want to see what the ROI is going to be in quarters to come.
When it comes to tech, though, it's always about what is the next trend, right? And we are seeing that kind of broadening out, to your point, but also to the memory space. Those are the ones that have been doing well as well, I think, the past couple of months. Do you see more upside in that sector?
Tuck away the whirlpool.
Yes, there would certainly be upside in that sector as well, and the reason why is that supply is lower than demand right now, right? So you have all of the XMAX sectors, the S&P 500 minus the Magnificent Seven investing in this, and they can't get their hands on these chips quickly enough in order to meet their own AI goals and their own AI infrastructure build-out goals. And so I think that AI infrastructure play is going to continue to pan out for investors. Excuse me.
Sylvia, are you okay? You can drink a cup of water while I ask you the next question, but I really am curious about. We now have the very unsurprising Fed decision, perhaps out of the way. Was that sort of what you were looking at, that we're not really going to get much insight or much surprise when it comes to their economic outlook? But what did you think of the fact that Fed Governor Christopher Waller also actually decided to dissent and vote for a cut?
Well, I think the Fed announcement was pretty much what the market was expecting, but the good news is that the rhetoric behind it is that, the economy is stable, continuing to expand. Unemployment numbers are staying steady, inflation is kept at bay, and all in all, we're in a good position. And if you look at the earnings announcements, so far coming out, and in the last couple of quarters, when we've had these higher rates, pre-cuts, these earnings numbers have continued to grow, and we're looking for double-digit growth again this year. So, you have this tailwind of a strong economy. You have a Fed that has cut rates, has paused for now, but is, the direction that they would likely go if inflation continued to come down, and we saw any kind of weakness in labor markets would be to cut rates further. Corporate earnings are great, and AI again is one of the big reasons for the GDP growth and the continued potential for GDP growth this year. So I think all in all, hearing that the Fed was pretty positive on the economy, on jobs, on inflation, and on economic stability is what the market was happy to hear.
And of course, we continue to have a lot of talk around the strength of the dollar. Does the Trump administration want a strong dollar? It was a weaker dollar. Does that change your calculations around your investments, especially when you're looking at some of these big multinationals with lots of business overseas?
No, I think investors will look to hedge their exposure through various vehicles and FX hedging in years to come, and quarters to come if they are expecting inflation in US dollar here. But I think that's been on the table for the last couple of quarters or so. I don't really expect a big change there. What I do think, though, is that you are seeing this increase in different currencies as related hedges. For example, gold, less so than crypto. You've seen silver get a bounce. And so it's really interesting to see how some of these commodities are responding to that as well as part of the diversified portfolio allocation.
Yeah, Sylvia, to your point, we are seeing gold climbing above 5,400 with traders perhaps betting on dovish Fed, that policy shift a bit down the road, I wonder how positive you feel about the commodities complex overall.
Yeah, I think, there are certainly spots in the commodities complex that are interesting. And what I would say is that a lot of the commodities that again go back into that AI infrastructure play, the picks and shuffles of everything that is needed to build out AI infrastructure, the energy and some of the commodities in that sector could potentially see tailwind and growth as this grows out. But I also just think that there's momentum. We talked about gold and silver. We've seen momentum because investors are piling into this. They're looking for this as perhaps inflation hedge, diversified portfolio hedge, and they've seen performance there. And so I think in the short term, you could continue to see allocations to these spaces.
Olivia Jablonski, always good to have you with us. Thank you so much, CEO and CIO at Defiance ETFs. We have more ahead on the Asia Trade. This is Bloomberg. Take a look at how commodities are trading. Of course, the expectations of what will the Fed do next is key, but we're seeing precious metals like gold and silver reaching record highs. It's all of the uncertainty, geopolitics as well, which is why oil is continuing to gain ground at the moment after President Trump posted on social media that Iran needs to make a nuclear deal with the U.S. or face military strikes. We have more ahead on the Asia Trade. This is Bloomberg.
Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments too on inflation.
Fed Chair Jay Powell speaking following the central bank's decision to leave interest rates unchanged. Of course, FX traders also passing the Fed Chair's comments, but also take a look at how we did see those comments from Treasury Secretary Scott Bessent fueling a bit of a reboot in the greenback. The Bloomberg Dollar Index at one point jumped by the most since July last year, but you are still seeing it looking quite firm on dollar versus the yen and against the Chinese offshore renminbi as well. Let's get more on the swings in the dollar with Bloomberg's FX and rate strategist David Finty. David, prior to Powell speaking, you were talking about how we've been watching to see if there's potentially a bit of a hawkish shift that could help the US dollar. Is there any of that traders are watching, and is that their takeaway?
I think at the end of the day, it came in line with expectations. More or less. I mean, the market's not looking for a rate hike until maybe June, definitely by July, but you're looking certainly a few months out. And they're still basically looking for pretty much 2 by the year end. So Powell was in line with that, even though he said, yes, things are improving with the labour market. The market goes, well, at some point, look, you will be replaced with someone more dovish, like whoever President Trump nominates. So markets go, look, we do expect more rate cuts down the line. So that really hasn't changed. The bigger impact on the dollar last night was obviously with Scott Bessent's comments on the strong dollar policy.
Yeah, how do you take those comments? They want the strong dollar policies, what Secretary Bessent said, reiterating what he had already said last year. And he also just emphasized that they're, quote, absolutely not intervening in the FX market gets to support the yen. Do you take that at his words value, or could we speculate that although they're not doing anything right now, they could in the future?
Yeah, I said at the moment regarding the intervention, I mean, from what we heard, they haven't intervened. There was a rate check, but that's not actual intervention. So, from what he said, the data sort of backs that up. regarding the strong dollar policy, I think it's very important to look at how he nuances this. If you go back to what he actually said on Bloomberg July last year, he said, again, he commented that the US has a strong dollar policy, but he says that's got nothing to do with the price of the dollar. It's more to do with the key long-term fundamentals that will the dollar maintain its reserve currency status. And he's alluded to something similar again yesterday about the fundamentals, like, President Trump's policies are growth related, and therefore that will be positive for the dollar, and therefore, it will maintain its reserve currency status. So the key thing is that's really what he's going with the strong dollar policy. It doesn't say, I actually want the physical dollar to be stronger versus the yen, stronger versus the euro. He's sort of indicating, no, that's not really what I'm on about. So I think the market goes, when we hear strong dollar policy,
how would you like to just keep the goatee, take everything else off?
Literally a strong dollar. But the actual nuances says that's not the case.
It's okay. Just how would you like it? I can
So
put the
reading
machine
between
in,
the
you can go home
lines,
and put the razor on.
what are
it.
traders
Just
doing in
keep
terms
the
of
goatee or
positioning
take everything
then,
off.
in terms of the longer term
Take
trajectory on the
everything
greenback?
off. Okay, so I
How
got
bearish is
that
it
for you,
coming?
Taylor. Would you like for us to trim your eyebrows today?
You're in a volcano.
No. Would you like for us to clean on the outside of the eyebrows? You like the volume, but you want to clean on the outside or no? I usually just do it myself. Just okay, perfect. Go ahead, play your chin up. Be very careful with your eyes, okay? Play your chin up. Close your eyes, relax your forehead.
They say
You're
higher
gonna feel a little bit
education
sharp.
is outdated, irrelevant. We say don't settle for the status quo. At Grand Canyon University, we shatter it. We lead with a pioneering spirit. In classrooms, there are incubators for bold ideas.
You want opportunity. You want purpose. A chance to lead and serve in meaningful ways.
This is purpose-driven education. Take action. Find your purpose at Grand Canyon University. Visit gcu.edu.
Did you recently lose your Medicare plan for 2026? If your Medicare Advantage plan was terminated, now is the time to check your zip code and find a new Medicare Advantage plan in your area. Insurance companies offer different plans in different zip codes, and some Medicare Advantage plans were terminated for 2026. If your plan was terminated, call the number on your screen for a free Medicare benefit review. Medicare Advantage plans, networks, and benefits differ based on your zip code. If you lost coverage, now is the time to call and review your options. You still have time to enroll in a new Medicare Advantage plan for 2026, but it won't happen automatically. More than half of people on Medicare are enrolled in a Medicare Advantage plan, and 2026 plan terminations happen throughout the country. If you're one of the people who lost coverage, now is the time to check your zip code. If you're unhappy about losing coverage or returning to original Medicare alone, we can help you shop for other coverage options in your area. Don't go through 2026 without the coverage you need. You may be eligible to enroll today. If your Medicare Advantage plan was terminated and will no longer be available in 2026, this is your chance to shop, compare, and enroll in a new plan. But you must take action to do so. Call the Medicare Benefits Helpline at the number on your screen. Licensed insurance agents are standing by to help people in your zip code. Take action now before your special enrollment period ends. If your Medicare Advantage plan was terminated, this is your chance to enroll in a new plan for 2026. The Medicare Benefits Helpline is open now and ready to assist. If your plan was terminated, do not wait. Make sure you get the right plan for your needs. Call now for your free Medicare benefit review and enroll in a Medicare Advantage plan today.
Call 800-594-7331. That's 800-594-7331. 800-594-7331. Call now.
Yeah, but certainly because people are trying to get short. Yesterday or the day before, we certainly saw a lot of people go to digital options for the euro to rally against it, for the yen to rally against the dollar. The Aussie dollar is another one that's gained some interest because even though with Besant for market yesterday, please, you've got to note that the Aussie dollar ended the day stronger against the greenback, despite what Besant said. So there's definitely a bias towards a weaker dollar. I think traders trying to work out what's the best way to express that, because given the pullbacks in the yen and the euro overnight based off Besant the mark, some traders may be flushed out, some others a bit more frustrated, but I think they are still trying to look at the right level to short the dollar. And I said at the moment, the Aussie dollar has just been trending positive, whatever Besant, whatever Trump has basically said.
Bloomberg FX and Rate Strategist David Finnerty there joining us from Melbourne. Great to have you with us. We continue to watch precious metals at the moment as well because gold has now risen past $5,500 an ounce for the first time ever. I have to continue updating my notes right now because we went from 5,400, 5,300 in just the last few days, and all to do really with the expectations of what the Fed will do next. Perhaps some expectations of more easing down the line, but let's get more on the outlook for the U.S. economy following the latest Fed decision to hold rates steady. That was pretty much expected. Joining us now is Jeanette Garrity, Chief Economist at Robertson Stephens. Jeanette, always great to have you with us. Does today's Fed decision move the needle at all when it comes to rate expectations for the rest of the year?
Great expectations for the U.S. economy, perhaps? Not really. I don't think this changes much of anything. First of all, it was expected. Second of all, there was actually remarkably little discussion in the press conference. I was very surprised about the trajectory on interest rates beyond some discussion about the next meeting. So I think maybe everybody thought they knew what Jerome Powell was going to say if they tried to pin him down to the second half of the year, but there really wasn't a whole lot of substance there. And he did a rather interesting thing, in my view, which is to shine a light on some of the fiscal policy issues, some of the things that are bothering people in the U.S. economy right now, if you will, that do not have monetary policy solutions, only have fiscal policy solutions. So that's where I think he's saying that the needle is going to move, and he's comfortable with monetary policy where it is right now. That could change, as always.
To your point, a little bit of that K-shaped economy that we're seeing, right? The wealthy getting wealthier, but also I think a lot of that conversation was crowded out by the fact that we were really getting a lot of questions around the politics of everything, right? I have to ask you, what did you make of Governor Waller's dovish dissent? Does that sort of give us a Fed put in the months ahead if he were to become the next Fed chair?
Possibly. The only thing I made of it right now, actually, one that's a bit of a offhand remark, which is that he's the only Fed governor, that the current sitting Fed voting member who is being contemplated to be a future head of the Fed. So, he voted this way because perhaps he wanted to signal to various people that he, in fact, would be rather dovish. The leeway, the theoretical leeway for why he did that was in Jerome Powell's remarks. He did say that while he feels, and while the majority of the board felt that they were very comfortably in the neutral range for monetary policy, the neutral rate of interest, that it was at the high end. So there could be, it's not out of bounds that Chris Waller could say, well, I think we could have cut a quarter point and we would still be firmly in the area of neutral policy stances. So that would be the cover for what he decided to do.
Investors seem to be just focused on the path in the second half for the Fed. I mean, you look at the way gold has popped, right? The expectation of a dovish shift. What is your sense of, in the first half, is it fair assumption that we're not going to see a cut?
Well, now you're pinning me down to time and date and magnitude, all of that stuff that economists love to avoid. I do think that there will be 2 cuts this year. The timing of it, I would see as mostly being in the second half, but could come in a little bit earlier. But my expectation is premised on an assumption that we will actually see some improvements in the inflation numbers because of the way that the numbers are calculated and because of other general trends in the economy. And I'm making a grand assumption that there won't be any unexpected tariff announcements. But if that doesn't happen, then I don't know about those two cuts, and we could have a very confrontational environment if inflation starts to go the other way. I don't see that right now. I think two cuts are in the mix. I'd see it starting at mid-year.
Okay, so a couple of caveats to those outlook. What is your sense of the dollar whiplash that we've been seeing this week and the overall negative trajectory for the greenback? How might that affect the U.S. economy?
It will have macroeconomic effects. It will have effects on prices in the United States. So the weaker dollar makes those goods coming in from overseas that much more expensive. We always see that in play. I think Scott Bessent and Jerome Powell are being economically, intellectually honest here in recognizing that first of all, you can't do very often what you want to do for the domestic economy if you are trying to do something for the dollar, something in the global markets, for example, at the same time. You usually have to pick one perspective to determine policy. It's domestic, and that's what they're going to stick with. There's obviously a lot going on. I'm not sure how much of what is going on honestly reflects the fundamentals as I see it. This is still a very strong economy, and so it should, the dollar should not weaken this much.
Yeah, I mean, to your point on the inflationary effects of the US dollar, we saw long-term treasury yields actually move as the dollar was falling and actually move in the opposite direction as the dollar rebounded, right? I want to take you to the earlier point that you were making about this bifurcation in the US economy as well, because we have seen the Fed now perhaps shift towards their focus on the stabilization of the job market, but that K-shaped economy that we continue to see in the US, how problematic could this be?
Well, it's very problematic from a political standpoint. It's problematic for monetarists, for the Federal Reserve, because it partially goes to the heart of what they feel they are there to do, which is to protect the general fabric of the U.S. economy, which is usually expressed in terms of inflation and employment, but it covers a number of other things. So I don't think they like necessarily what they're seeing there, but their tools are not tools that are designed to do something about many of these things. And so that's why I think there was Jerome Powell correctly mentioned, well, it's understandable why, from a spending standpoint, we are seeing stronger spending in one sector of the economy, because that's a sector that tends to hold more stocks and bonds, more real estate. Those are areas where prices have gone up, and so they're spending it. But the fundamental problem of affordability and employment availability in certain sectors, that's a hard one for the Fed to address.
Jeanette, we got to leave it there for today, but it's always great to hear from you. Always learn something from our conversation. Jeanette Garrity, Chief Economist at Robertson Stephens. We have more ahead on the Age of Trade. This is Bloomberg.
Take a look at some of the big moves ahead of the market opens in South Korea, with Samsung and SK Hynix both gaining ground. Samsung just reporting a few minutes ago with fourth quarter net beating estimates. In fact, both of these companies reporting a very, very strong quarter, of course, all to do with their AI chips, not to mention, of course, the rise in memory prices. Let's bring in Asia equities reporter Tangmi Chan for more on these earnings, because Tangmi, we are seeing now the pre-market trading pointed to the upside, but these are stocks that have rallied already a lot, right? But we have more good news when it comes to the results.
That's right. Samsung's Samsung shares have actually doubled in 2025, and the shares have rallied 35% this month alone, and it's only been January for this year, and we're seeing this kind of rally. And it really reflects back to the earnings. It has reported that five-fold profit for this 3 months quarter, and we see similar patterns in SK Hynix earnings as well. But of course, it all goes back to that shift in the customers of these memory makers. Once it was always the PCs or the smartphone makers who would actually delay their buys if the prices were not good. But now it's shifting entirely because of this AI boom that we're seeing. So their earnings actually really reflect the global AI consumption and the spending that we're seeing from the hyperscalers. Of course, and Citigroup has said that the DRAM and the NAND prices for this year is going to rise about 120% and 90% respectively. So that just really ties back to these earnings. And everybody says, well, if the share prices fall today, then not to be worried because the next quarter is going to be great again. So they're just piling into these two stocks.
So they're piling into these two stocks. Where does this leave the rest of the Korean market? And what are you watching when trading begins overall in South Korea?
Yeah, so overnight, of course, we had the SK Hynix earnings as well, and they have put the strongest quarterly results. And again, everything has to do with HBM, the high bandwidth memory. That's the latest and advanced chips that is used for NVIDIA's AI accelerators. And of course, SK Hynix actually started off as the underdog in the space, but it has really paid off. Their bets on these HBMs paid off. And so we're seeing a little bit of that rare earnings call, the dual earnings call between SK Hynix and Samsung today. And it's going to be very interesting to see what they're going to talk about, how the rivalry between the two domestic companies in memory chips are going to play out. Of course, Samsung is coming up as a contender to SK Hynix's HBM strategy here. They're both vying for this HBM4, which is going to be the latest product that goes into NVIDIA's Rubin chips. So, and that all of this together does impact the Korean market. The Korean market has rallied 25%, 26% this year alone, and that's adding to that 75% gains in 2025. So, and it's also been, we've been also seeing that running out of this rally from the bigger blue chip names to the small cap names because the government is mulling that costly 5,000 milestone, which they hit. They're now mulling a COSAC 3,000. So everybody's believing that could potentially happen. So we're seeing that running out of the rally. And this would definitely affect the Asia markets as well, the Asian tech stocks.
Yeah, especially here in Japan because we're watching suppliers as we got ASML's results as well.
Yeah, so we saw that strange fall after that strong earnings from ASML. And of course, the key stocks in focus would be LaserTech in Tokyo because they always move in tandem with the ASML stocks performance because they're, again, in that same EUV space. But I think we do not have to worry so much. It seems like Advantis, the testing company, has had a great is going to have a great earnings, and so that is going to have overall boost to the Japanese semis market or the tech market overall. And of course, Hynix and Samsung earnings are also going to boost some of these Japanese stocks. Not to mention the Philadelphia Semis Index have also gained overnight.
Sang-mi, much appreciated. Thanks so much for running us through what to expect when trading begins in the next hour in Japan and South Korea. Bloomberg Asia Equities reporter Sang-mi Cha. And more from the corporate front, Amazon is cutting 16,000 corporate jobs worldwide to trim bureaucracy and boost accountability. The company says U.S. employees will get 90 days to find another role inside the company, plus severance and transition support. Amazon's now announced 30,000 cuts in just 3 months as CEO Randy Jassy moves to trim management layers added during the pandemic.
What if I can build an app that works my way with Base 44? My work is chaotic, and I need tools to keep up. Today, I can build an app that adapts to me. I can create calculations, automations, and insights I need all in one place. And I add my own AI agent that handles the routine work. All bells my way. My numbers, my projects, my data. Because when you create it yourself, it just works. Base 44, build it your way.
You love this style of shoe. They're comfortable, casual, stylish. But Skechers has topped them and made them even better. Because now they come in hands-free Skechers slip-ins. Just slip in and go with no bending down and no touching. Try hands-free Skechers
I don't even
slip-ins.
know why I'm gonna put them in everything.
Current owners and lessees of an eligible competitive luxury brand vehicle get this peace offer on this 2026 Cadillac Lyriq.
Volkswagen plans to boost exports of China-made cars to take advantage of low production costs. Its CEO says the company has begun shipping vehicles from China to the Middle East and Southeast Asia and is eyeing Africa and South America next. The German automaker is also cutting costs by shifting more R&D to China and partnering with Expo. Starbucks shares closed lower despite stronger than expected growth last quarter and a solid outlook for the year. Global same-store sales climbed 4%, beating estimates. CEO Brian Niccol told analysts the company has identified $2 billion in cost cuts as it works to streamline operations and improve service. Sherry?
And we have breaking news here on the Bloomberg. We are now hearing from sources that Sony and Singapore's sovereign wealth fund, GIC, are forming a joint venture to acquire music copyrights with plans to invest $2 billion to $3 billion in the project. Now, this is a Bloomberg exclusive, and according to people with knowledge of the matter, Sony and Singapore's GIC are forming this joint venture. Sony's music division is one of the world's largest. It will manage the acquired catalogs, handling distribution to streaming services, and licensing older songs for use in films and commercials, according to the people speaking to Bloomberg. And GIC is providing capital and investment expertise. Now, this joint venture will give the Japanese company Sony the funds to build up its portfolio of songs. Now, with the deal, all three of the world's largest music companies have set up partnerships with financiers to help them acquire more rights to songs without having to provide all of the money themselves. We'll be watching Sony at the open. We have more ahead on the Asia trade. This is Bloomberg.
Continuing to digest those big tech earnings, of course, coming into the session, it was about their capex, the spending on AI, and the extent in which they're seeing any form of payoff. So you're seeing that perhaps reflected in revenue for the likes of Meta and the extent in which this can play out in some of its ad-related products. Meta still retaining those gains of about 8%. IBM did quite well too. We are seeing Microsoft going the other direction. That think is no thanks to those continued concerns, I guess, on the AI spending not quite paying off for the tech giant, Sherry.
Yeah, we're watching also Tesla, especially with Elon Musk now saying that they plan to invest $2 billion into XAI and talking about how memory chips are more of a problem and constraint than AI chips, which has really led to those gains on Samsung, SK Hynix, as well as Samsung, their chip unit reporting a more than five-fold profit gain. They announced a $2.5 billion buyback as well. We have seen SK Hynix already coming out yesterday with their strongest quarterly results to date, and of course that has led to gains broadly in the South Korean market. Take a look at how we're setting up, because the Nikkei is also showing futures and gaining after two sessions of gains already, with the Japanese yen under pressure after some comments from Secretary Bessent. The market opens there next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens with plenty to watch, including U.S. tech earnings, Asia tech earnings, and of course April. The very much expected rate hold from the Federal Reserve. Officials seem to be veering a little bit of their focus back on the stabilization of the job market.
Yeah, but investors are focusing on the back half of the year in terms of maybe expecting a dovish tilt from the central bank and then perhaps anticipating what we can see from the next Fed chair. We're seeing that rally in gold as well, maybe a bit of that policy uncertainty coming through in markets too, Sherry.
Yeah, trying to understand the authorities coming from the Trump administration, right? Especially when it comes to comments around the FX. We heard from Scott Bessent, for example, talking about that strong dollar policy and the fact that they're, quote, absolutely not intervening in the FX space in order to support the Japanese yen, which sent the currency just plunging in the overnight session. At the moment, we're gaining ground a little bit against the greenback at that 153 level. And you can see the Nikkei also under a little bit of pressure, down 0.2% after gaining for the past two sessions. And remember, here in Japan, we're also watching some of those suppliers, given that we also had some strong results coming from ASML. The JGB space also very important after that strong auction from the 40-year auction yesterday, which is sort of sent a little bit of a sigh of relief for the JGB space after that meltdown last week. But take a look at how the Korean market is coming online, because remember, we are already at record highs, and then yesterday we got SK Hynix results that showed record quarterly results again, of course, on the back of HBM, advanced AI chip demand, not to mention also the memory prices are going up, and that's really leading to some of those companies to gain ground, including, of course, Samsung Electronics that's gaining 1%, and we have the earnings earlier today, and really it's a beat across the board. We're talking about their operating profit gaining 5-fold, and already this stock has gained more than 130% since September, and you can see the cost be record highs again, and even the Korean won strengthening today.
Sherry, we were just talking about the Fed and how things came in pretty much as expected. We now have a central bank decision out of the Lion City as well, Singapore's monetary authority, and we are seeing how they have left the slope width and the center of the currency band all unchanged. This was projected by all but one of the 20 economists that were polled by Bloomberg. And we are seeing, interestingly, the MAS is seeing 2026 core inflation between 1 to 2%. They are also expecting to increase modestly in the near term, the core inflation trajectory, in that maybe this also signals a bit more concern about how sticky inflation is in the country. We have been seeing that in terms of food and transport to some extent. We are also watching out for the moves in the Sing dollar, because don't forget, this week we saw it hitting the strongest level against the greenback since 2014. Now, in terms of the forecast for growth, they have seen these risks to growth, and the inflation outlook also tilted to the upside. We are in the Sing dollar also pairing some of those gains after the central bank kept its policy setting unchanged. Now let's take a look at how US assets are faring in the early goings in terms of US treasuries, because it was pretty much an anticipated move for the central bank. We were anticipating that they leave things unchanged. The question marks, though, about what they would say potentially about Fed independence and the trajectory of rates in the first half of the year. Powell seemed to not want to veer into that direction or lock himself into anything. And as some of our guests have been highlighting, really that conversation about how monetary policy can only do so much. Really the focus on fiscal policy, perhaps alleviating any cracks in the economy in the US. And given how we have been seeing that K-shaped trajectory in the world's largest economy, maybe that is something also for consideration. But investors have been betting on what we see from the Fed in the second half, and to that end, we've been seeing gold, perhaps on the expectations of the dovish pivot, topping yet more records past the 5,500 level. The dollar also reversing the gains that were sparked by Treasury Secretary Scott Bessent's comments. And we also heard from Powell. He had some words to say for his successor. Take a listen.
Economy expanded at a solid pace last year and is coming into 2026 on a firm footing. There was broad support on the committee for holding today. Broad. We will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases.
I'm wondering what advice you have for whoever your successor might be.
Stay out of elected politics.
Chair Powell also got a lot of questions around the impact of artificial intelligence and what that would mean for productivity in the future. Of course, given this AI demand and trade, we have seen some of these Korean names really rally across the board. Samsung's chip unit blew past expectations last quarter with a more than five-fold profit gain. Samsung's bidding to narrow the gap with Korean rival SK Hynix in next-generation HBM4 memory also really taking hold. Let's bring in our Asia equities reporter, Sang-mi Cha, for more details. Sang-mi, so we had a bit more insight on the delivery of these advanced chips, but also Samsung seeing some of that windfall coming from memory prices.
Okay, very sharp, very dangerous.
That's right. Samsung's shares have doubled in their value in 2025, and we can already see in their share prices it's gaining again this morning, but it's up about 35% this month alone. And so it also showcases how it goes back to their semiconductor division having a great quarter, and also expanding on some of those shortfall in DRAM and NAND that we have been talking about. The whole eyes are on the prices of these DRAM and NAND, which Citigroup predicts that is going to be hiked by 120% for DRAM and 90% for NAND, which is, we all need these memory, the conventional memory for our laptops, our smartphones. Now, all of this is happening because the customer base for Samsung and Hynix is changing. It was always these customers that goes back to the consumer electronics, but now it's the hyperscalers that actually power the global AI boom, and they have so much investments, and they're just all of these capacity is already booked, and so it's always also turning into some of these contract-based platforms. So in the past, it was always booked in terms of a quarterly basis, but now it's moving towards longer-term contracts, which is really a benefit for Samsung and the likes of SK Hynix. So all this is going to be addressed at the rare dual earnings call today, where SK Hynix and Samsung are both going to be talking about precisely this.
I mean, the stocks, both of them right now, early in the session, gaining ground, but it's been incredible to see in the rally of SK Hynix as well. Those results we got yesterday.
Here's Lionel Shipley with a tricky par-5. Club selection is key here. Interesting. And that was not the right choice. In golf, guessing costs you strokes. In healthcare, it can cost a lot more. Why make decisions to chance? Claritin. More clarity, less guesswork.
Have you ever done a job for $11 million? Isn't that what you guys call walk-away money?
Living out second. There's no DNA. He's not working alone.
There's no way out.
It's the thing about walk-away money. You gotta be able to walk away with it.
SK Hynix actually had the strongest quarterly results last night, and all of this ties back to the high bandwidth memory. It started off with as an underdog with a lot of debts back in the days, but now it's actually become the leading supplier of these advanced HBM chips to NVIDIA's AI accelerators, and of course, some local media is saying that it is going to be an exclusive supplier to Microsoft as well. But of course, there are some very variables coming. Now the latest is the HBM3E, but the HBM4 are the ones that Samsung and SK Hynix are both vying for. This is going to be the one that is going to be going into the NVIDIA's Rubin chips. That's going to be the next point of clash there. But of course, all of this is boosting the Korean market overall. Korean market, in terms of market cap, has overtaken that of Germany's yesterday. It's hit a $3 trillion stock market. And of course, that does not compare to the economy of that European country. But again, it is the stock market single-handedly just boosting the economy as well, and the pockets of the people in South Korea.
What about Japan stocks, and how much of that focus is in some of the chip-related names following on from ASML? It reversed the initial surge in terms of trade.
Right, ASML's stock performance always ties back to the companies in Tokyo, the likes of Laser Tech, because they're in the same EUV space. But again, Japan also is going to be looking at what the Advantis, the testing company, reports, because that is going to be a boost for the overall Japanese tech companies. And of course, the SK Hynix and Samsung's earnings are also going to be a confidence boost for the Tokyo's stocks there. And also overnight, we have seen the Philadelphia Semis Index also rise. So that all together is going to be boosting the Asian tech stocks here today.
Sang-Mi, thank you so much. Our Bloomberg Asia Equities reporter, Sang-Mi Cha. We have more ahead on the Asia trade. This is Bloomberg.
Right, we're watching Tesla's after-hour session after higher than expected profit for the fourth quarter. The company also saying that it needs to build a chip factory of its own as it's mapped out $20 billion worth of investment this year. The EV pioneer also revealing plans for those investments when it comes to XAI. Let's bring in our Tesla reporter, Dana Hall, with the latest. Dana, what were some of the key takeaways?
Yeah, it was a really interesting quarter. As usual, it's all about what Elon Musk says on the call. The big takeaway from the print was that Tesla is indeed investing $2 billion into XAI, another Elon Musk company. If you'll remember, shareholders kind of, this was something that came up at the shareholder meeting and was tabled. So to sort of get this announcement in the shareholder deck was not a huge surprise, but it was a big thing out of the deck today. And then on the call itself, they just talked a lot about big spends coming, $8 billion in capex, plans to build a solar cell manufacturing facility, and a large chip fab. Elon Musk seems very worried about geopolitical risk, and Tesla needs a lot of chips. They want to have their own supply. He's always been a big fan of vertical integration. There wasn't many details about where this factory could be built and on what kind of timeline, but it is definitely something that they are apparently talking to banks about, and there'll be another announcement in the future.
How are investors taking to the idea that this investment will go from Tesla into XAI as well?
I think it depends on what kind of investor you are. I think that a lot of retail investors are very supportive of this. I think institutional investors might be a little more lukewarm, but obviously when you invest in Elon, you invest in his overlapping empire of 5 companies, and some people are probably very excited. I mean, AI is the hot sector right now that every company is making moves into.
All right, sir. Welcome back to
What do we
yourself.
know
When you
about
came to the shop, you looked like
some
one of
of
your
the production
cousins. We didn't know who
facilities
it
and
was.
perhaps
All right.
some deliveries that we can see from the
Once
company
again,
going
thank
forward?
you for giving us the opportunity
The
to be
company
a barbershop.
is
Thank you for
really,
giving me the
I mean,
opportunity
it's
to
making
be
it
a barber
abundantly clear
today.
that it is
Anytime
no,
you need
it
us,
is
7 days
not
a
an
week,
occasional
sometimes
party maker. They
whatever you
announced
normally pay is
also
fine.
on the
Whatever
call
you give us,
today that
I'm just
they
gonna
are
hide from my
sunsetting the
girlfriend.
Model
If she
S
sees it, it
and
will
X. You know, these were the early models that Tesla first unveiled to the world back in 2012,
You see
2013,
46. Top of the morning, Miss Allison.
sunset, and those production
Don't forget
lines
about the
in
non-celebrities
Fremont
over
are
here.
going to be turned over to automated robots. So
You know I'm
really
retired,
seeing a
right?
shift of the company
Air
away
Force
from
Space
traditional
Force always
vehicle
on duty,
manufacturing
yo.
to robotics begin to happen here in Fremont. And they didn't give any kind of volume outlook. Going forward, they're really
We'll
focused
see you
on
next time.
road
Hey,
taxi
pa, ahora
and
sí, verdad.
transportation as a service.
High wings now. All right, thank you. I'll see you soon. Thank you for your service. See you next time, okay? Thank you very much.
Dana Hull. Now, the AI outlooks in focus as we get the first big tech earnings for the quarter, of course, and we've been seeing Microsoft shares falling in late trade after it reported record spending while noting slowing cloud growth. Investors were also more positive on Meta's AI spending increase as its quarterly revenue forecast top projections. Then we also had IBM gaining sales beat estimates. Joining us now for analysis on the markets, David Chow, Global Market Strategist at Invesco. David, good to see you. So, do you think there has been enough in these earnings releases from the big US tech names to keep the tech bulls happy?
Well, I think that what we've seen so far has been quite encouraging. That not only tech companies are reporting strong and resilient earnings, but we're seeing tech companies also branch out into new sectors. For example, like Tesla into robotics. I think that will be enough as continued demand for high tech manufacturing continues to boost demand for tech related products and services.
How much of a problem might the memory shortage be for some of these tech names? Elon Musk himself raising it as a sort of issue.
DJ Marshmallow, baby. Check me out.
And also services, semiconductor services are very in demand types of areas of tech going forward. And I think that a lot of investment is looking at those related sectors. I think that the memory shortage right now is going to be just a near-term blip as capital pivots to that area, and then probably see some amelioration, some improvement later on in this year in memory.
At least for now, though, when it comes to some of these stocks like Samsung, SK Hynix, can we expect more upside for the time being given the demand?
I think so. I think that the future of a lot of AI-related services, AI-related apps, AI-related products could be using lower-end semiconductor chips, which Samsung, which Hynix manufactures, compared to some of the other higher-end chips. I think that the demand for lower-end semiconductor chips for AI continues to be quite robust, and that's where a lot of the demand is going to come in the future.
Given that now we have gotten the very much anticipated decision from the Federal Reserve on that rate hold, is it safe to assume that the narrative when it comes to Asian markets will now move towards the earnings season, towards the tech rally? How much are you looking at the gyrations in the FX space, given everything that the Trump administration is saying around the dollar as well?
Well, I think the dollar is still likely to weaken, even though we did not get that Fed rate cut. Dollar remains expensive relative to a basket of currencies, especially a basket of Asian currencies. This could mean that some Asian banks are on hold because the Fed did not give the cut this time around. But we have to assume that we're in a better position in Asia because this part of the region does not have continued elevated levels of inflation, which means that Asian banks still have the luxury of cutting rates. Perhaps maybe not as many as we originally expected for this year, but I think this region still is in a rate easing cycle, which should be supportive of equities.
Yet we got at the top of this hour from Singapore Central Bank, they are raising, or at least they're seeing a bit of upside risk when it comes to both growth and inflation. What are the risks involved here when it comes to the prices in these various countries, as we see perhaps stickiness when it comes to some of these inflation factors?
Well, I think for Singapore, it's not an inflation issue there. Growth is much better than expected. The IMF forecasted growth at the end of last year for Singapore to be in the 2%, but Singapore's GDP came in double that, in the 4% range. So I think that Singapore's economy is reflating. Yet we're not seeing the inflationary impulses that normally come. But we're certainly keeping an eye on that. Overall, the Asian economy is reflating due to things like monetary stimulus and also fiscal stimulus in places like Japan. So I think that we're in an environment where equities are preferred over fixed income, because as the economy inflates, stocks tend to do well. But I also think that gold will continue to do well in this inflationary environment.
David, can we ask you a bit more specifically what you're watching in Southeast Asia aside from Singapore? I mean, just a day ago, we saw how the MSCI fired a sort of warning shot on the Indonesian market, and then we saw a steep decline. Today, we're hearing how Goldman is downgrading Indonesian stocks. I mean, how do you view EM Southeast Asia?
I think that there's too much pessimism around Indonesia. I think that Indonesia looks very interesting given where valuations are. Valuations are rock bottom levels, compared to other parts of Asia. And I think that there are pockets of opportunity in Southeast Asia, and especially in Indonesia. Indonesia has quite a diversified economy, built both on cyclicals, mining, consumer staples, consumer spending. I think that as the Asian economy starts to deflate, you want to be long those economies that are most cyclically adjusted. And I think Southeast Asia and Indonesia is a good example of a very cyclical-oriented economy that should be the beneficiary as growth improves. The global economy is shifting from kind of a mid-cycle slowdown to a bit of a recovery this year, driven by easing monetary policies and also more fiscal stimulus around the region. And cyclicals should be one of the biggest beneficiaries.
They say higher education is outdated, irrelevant. We say don't settle for the status quo. At Grand Canyon University, we shatter it. We lead with a pioneering spirit. In classrooms, they're incubators for bold ideas.
GCU empowers learners of every generation, on campus, online, and hybrid learning environments.
This is purpose-driven education. Find your purpose at Grand Canyon University. Visit gcu.edu.
If your family cheated you out of billions, how far would you go for a little payback?
We'll be right back.